A very good afternoon to one and all present here. At the outset, it is extremely a pleasure to welcome you all for this 83rd session of Zen Tax Talks. Doing a continuous activity for 83 weeks has been a phenomenal experience thanks to the participation by each one of you continuously, consistently across all these 83 weeks. So this has been the biggest motivation for us, and it is extremely a very proud moment to tell you that almost 6,000 participants have been greatly benefited through these Zen Tax Talk sessions. This has not been a small number, and this has been possible only by your own by each one of your individual participation across all these sessions. So we very wholeheartedly thank each one of you for being here at this special session today. And we have with us CA Pavitra, who would be discussing about a very important topic that is being circulated very well on social media, and that was very much expected as well. The topic relating to Gpay and GST notices. So about this topic, before I really touch upon the very practical perspective of things, on a legal side, the lawmakers have been extremely very vigilant, very cautious, and the wordings of the GST Act have been drafted in such a way that there will not be any revenue loss for the government at any point in time. Why do we really insist on this legal interpretation when we are going to talk about Gpay and GST notices? Before the introduction of GST as well, under the state acts, we had the concept called as the value added tax, which was in the state of Tamil Nadu, it was called as the Tamil Nadu Value Added Tax Act. In the state of Karnataka, it was called as the Karnataka Value Added Tax Act. These VAT acts provided also that where an unregistered person crosses the prescribed threshold, does not take a registration, has not paid tax to the government, then it can be subjected to tax. In all these situations, the scenario that would generally arise is that the taxpayer, when he is confronted with the situation that he has not paid tax on his taxable supply, on his gross revenue, he will come back to say, I have input tax credit which I have not claimed. Therefore, the input tax credit, which is the name itself very clearly demonstrates that it is only a value added tax. Therefore, the input tax credit ought to be given, and only the differential tax needs to be collected from me. On a very simple understanding, let's take a Kirana shop person. I will not touch about the scenario of a vegetable shop dealer, a vegetable dealer, which I think Pavitra would be discussing about what happens in the case of a vegetable dealer also. Let me talk a very small Kirana shop. In Tamil, we can say it as or Pottikara, right? That person, let's assume he has a turnover of rupees 80 lakhs. When he has a turnover of 80 lakhs, that let's assume that is a first year of business operations. His turnover is above rupees 40 lakhs threshold. So the remaining balance of rupees 40 lakhs, he has to pay GST. When he has to pay GST, he has not got himself registered. When he has to pay GST, he will immediately come out and say before the tax officer, sir, I have the purchase bills, say for example, from Hindustan Unilever, from Hindustan Lever. I have the purchase bill, say from example, from Tata. I have the purchase bills, all these things. I need to pay tax only for the differential amount, which is in excess of 40 lakhs, and that too I will claim input tax rate. Therefore, on the 40 lakhs also, which he did not take registration, which he did not pay tax, net he will pay a tax, a very sultry, a very small amount of say 50,000, 60,000 rupees, and say all my due taxes have been discharged. This has been the scenario in the erstwhile regime. In the GST regime, the taxpayers have been very careful in drafting the law to say that tax has to be paid by a taxable person. The benefit of input tax credit is available only to a registered person, and therefore any person who has not got himself registered cannot entitle him to the benefit of input tax credit when the suppression in sales is identified at a later stage. So therefore, the assessment or a notice in respect of a registered person is to be handled in a very different scenario, and the notice in respect of an unregistered person is to be handled in a completely different scenario. For the very clear reason, the legal interpretation which very clearly goes to say that input tax credit, as the wordings contained in section 16 of the CGST Act, very clearly says that input tax credit is available only and only in respect of a registered person. But whereas when we read about the scope of supply and the charging section, it is very, very clear that the scope of supply and the charging section is with respect to the taxable person. Therefore, to get the benefit of input tax credit, number one, or to get the beneficial rate of tax with respect to the composition scheme, the simplified scheme, which Pavitra would also be discussing in elaborate detail, it is a mandate that you need to be a registered person. So after there has been a notice issued to you, you cannot come out and say, if I was under the composition scheme, I would be paying only tax at the rate of 1%. All those submissions will not stand good if at all he is not a registered person, if at all he has not reported the turnover, if at all he has not opted for the composition scheme. Therefore, gone are the days where generally the trade and industry would remark, have you got a GST notice? Yes, of course, I have got a GST notice. You would have got a GST notice as well. If someone says, I have not got a GST notice, it is plain, simple ignorance that he has not checked that he has got a GST notice. Simple to say that every GST registered taxpayer in totality generally would have got at least one notice till today. I am sure all the members of the trade industry, the professionals and the GST practitioners who are here with us at this Zen Tax Talk session will definitely be aligned with my thought that every GST taxpayer would have got a GST notice. Now, the ambit is getting expanded to say that even though you are not actually registered for GST, you might still be getting a GST notice because of certain other parameters which also needs to be definitely checked into. And one of the most important parameters which has triggered GST notice even with respect to a person who is not registered under GST, or he might be doing entirely GST exempted supplies as well. That is one of the issues that has been triggered in large through the issuance of GST notices, particularly in the state of Karnataka, wherein based on the receipts in the bank account, that is based on the receipts through Google Pay, Phone Pay, and all these UPI-based payments, that your receipts have been tracked and GST notices are being issued. Therefore, we thought it would be a very important topic for the interest of the trade, industry, professionals and the GST practitioners. And therefore, we have this very interesting and important topic at Zen Tax Talks 33, wherein our expert speaker CA Pavitra would detail about the very practical aspect of things and also throw very detailed insights on why a person is actually required to get themselves registered, whether at all he should fear about getting the money in Google Pay. Definitely not. I would just take that 1 minute to say that Google Pay or UPI based transactions, you need not avoid it. Compliance of GST is easy. The only aspect is that procedural aspects need to be properly followed. Therefore, we have our expert speaker who will take you on through this session. Over to you, Pavitra, for the detailed deliberation, please. Thank you.
Good afternoon, everyone. Thank you, Aravind sir, for your valuable insights. Firstly, I would like to thank you all for your continuous support to our Zen Tax Talk sessions. Today, we are going to discuss a very interesting and an important topic at this point of time, which is the Gpay versus GST notices. As we came across from various news articles and also through social media, there are over 10,000 GST notices are issued to small vendors, kirana shop owners, and street side vendors in Karnataka. In today's session, we will see why these notices are issued and how we can, what are all the remedies available to us to solve these issues. First, I have listed a few news articles where we have come across in the past few years regarding this GST notice. One such thing, a very recent one, is that a vegetable trader in Haveri has received a GST notice from Bangalore tax office to pay 29 lakhs in taxes. In another case, a Pani Puri vendor gets GST notice as PhonePe and UPI payments cross 40 lakhs in a year. In many cases, NGOs and schools in Bangalore were questioned because of their UPI payment data. Also, as we have seen in Karnataka, over 20,000 notices are issued to small vendors, largely based on the data from their payment aggregators, that is their UPI platforms. In another case, a street vendor who is selling street side foods were raided by the GST department for allegedly earning 60 lakhs annually and evading taxes. So we have also seen in various videos which are circulated recently, where in many shops in Bangalore, people are shifting back to cash. That is, we have seen videos where people receive their QR code stickers and they are switching back to cash. Actually, this is not a remedy or a solution to switch back to cash. As we know, over the past few years, UPI has seen a tremendous growth in India. That too, post-COVID, we have seen a greater growth in UPI transactions. People have started UPI payment service for their day-to-day activities and daily payments. So this is, I have presented an article from Press Information Bureau, that is from Government of India. This is a very recent article where they have mentioned that India is the global leader in fast payments. Over 24 lakh crore rupees were processed via 18.39 billion UPI transaction in June 2025 alone. Also, UPI powers almost 85% of India's digital payments and nearly 50% globally. UPI handles 640 plus million transactions daily, which is ahead of Visa. As we have seen in June 2025 alone, it has handled over 24 lakh crore in payments. So this is the growth which I have provided as a chart. So from this, we can see in June 2021, the growth in UPI transaction from June 2021 to June 2025, we have seen a phenomenal growth. That is, if we take in value 5.447 lakh crores where only transactions were happening in June 2021. But in June 2025, it has tremendously increased to 24.03 lakh crores. So this number is not going to stop here. This is only going to increase in the future. So this UPI revolution is one of the fastest thing that happened across the country. Now we will see the transactions which has triggered these notices. As we have seen, the digital transactions such as the UPI or point of sales and other online banking. So these mode of payment have left a traceable electronic footprint. So through these digital transactions, these notices were triggered. Also, the unreported income may lead to departmental scrutiny or issuance of notice. The department uses mostly rupees 40 lakhs turnover as a common benchmark for potential investigation. So if there is any transaction over 40 lakhs in UPI, so those accounts were flagged and were taken for investigation. The department also uses data from service analysis wing. So that service analysis wing has access to UPI transaction records from financial year 21-22 onwards, and they have flagged the accounts which were linked to these PANs for whom the total credits in the account have exceeded 40 lakhs. Also, income declared under the Income Tax Act is also considered. If any person has declared income over 40 lakhs in their income tax return and they have not filed they are not registered under GST, and for those transactions also these kind of notices have been triggered. Also, this is not the first time these notices were issued. It has been issued over the past few years also. So why are traders receiving these notices? First, these notices are not always tax demands. These notices are often issued for seeking clarification from these small vendors. So they triggered through data analytics on PAN-linked UPI accounts showing turnover exceeding 40 lakhs per year. So those accounts whose turnover has exceeded rupees 40 lakhs, they are only asking for seeking clarification to these accounts. So here the objective of the government is to detect these unregistered business and also to bring those unregistered persons under the GST registration rate. So these notices help the government to detect the unreported taxable supplies and also to get these persons registered under the GST. As we saw, the department gets data from various other organizations. So are they empowered to collect these statistics? Yes, they are empowered to collect these statistics. This is given in section 151 of the CGST Act. In section 151, it is given that the commissioner may, if he considers that it is necessary to do by notification, they can direct that statistics may be collected relating to any matter dealt with by or in connection with this act. So by issuing a notification, the commissioner or any other person authorized by him may call upon the concerned person to furnish such information or written in such form and manner as may be prescribed relating to any matter in respect of which statistics is to be collected. So the section has empowered the commissioner to collect these data. Also, we have seen our personal bank account, many small vendors and other persons, small bank account details are can be collected, data can be collected by the department. Also, these unregistered person can also be assessed by them, which is given in section 63 of the CGST Act. In section 63, they have provided that notwithstanding anything contained to the contrary contained in section 73 or 74 or 74A, where a taxable person fails to obtain registration, even though he is liable to do so, or whose registration has been cancelled under subsection 2 of section 29, but who was liable to pay tax, the proper officer may proceed to assess the tax liability of such person to the best of his judgment for the relevant tax period and issue an assessment order within a period of 5 years from the date specified under section 44 for furnishing the annual return for the financial year to which the tax not paid. So from this we can see the proper officer has the right to assess the tax liability of such unregistered persons. Also, they have given that these persons should be given an opportunity of being heard without giving them any personal hearing opportunity. The order cannot be passed by these officers. Here I have given an example notice that is summoned to appear in person and to produce documents, which was recently given to a Pani Puri vendor, where this is given in Tamil Nadu. Here a person based on their reports received from Razorpay and PhonePe, you have received UPI payments for outward supply of goods or services. The payment details were also given. That is, this person has received payments through UPI in financial year 23-24 of amount 40 lakhs 11,019. So in this case, the GST department has asked the person to appear in person and to also ask them to produce the relevant documents. So in case if a person is liable to get registered, then then this person has not registered under GST, so they can be penalized. So that's what given in this notice. Firstly, the department will give us a summon to such person. Thereafter only the proceedings will begin. Section 70 gives the officers the power to summon persons to give evidence and produce documents. As per Section 70, the proper officer shall have the power to summon any person whose attendance he considers necessary, either to give evidence or to produce a document or any other thing in any inquiry in the same manner as provided in the case of civil courts. So the officer has the power to summon any person and they can inquire or ask details from such person. All persons summoned under subsection 1 shall be bound to attend either in person or by an authorized representative as such officer may direct, and the person so appearing shall state the truth during examination or make statements or produce such documents and other things as may be. So on inquiring, such person has to be summoned and they are bound to give the documents requested. So what happens if one person failed to attend the summon? It is important to note that summon proceedings are equal to judicial proceedings. So if a person who has been asked to summon has failed to appear without any reasonable justification on the summon date, or he has provided any false evidence, or he has found to be absconding to avoid the service of summons, or he fails to produce the electronic records or documents requested, or he has failed to appear even after being repeatedly summoned, then in addition to the tax liability, the person will also be liable to a penalty of rupees 25,000. That is, a monetary penalty will be imposed on such person under section 122 subsection 3, where this person will be liable to a penalty of rupees 25,000. So once these small traders have received these GST notices, what are all the remedies available to them? What are the procedures they need to follow? We will see one by one. We will see those in one by one. First thing is the small persons should not get panicked. That's the very fundamental thing. So we will now discuss the general points to keep in mind. So these tax traders or small businesses are advised not to panic. These notices have been issued only for providing clarification. So the government has provided that they can visit the departmental office from where they have received the notices, and they can also submit the relevant documents. Also, it has been clarified from the department that the officers will verify the information submitted by these persons, and they will also guide these small vendors on applicable GST provisions, and also they will levy tax only on the taxable turnover, excluding the exempted goods and services. Now we will discuss the common misconceptions around these notices. First, many people think that the total amount or the total credits received in our bank account through UPI is equal to the taxable turnover. No, all the credits in the UPI is not the taxable turnover. Merely receiving money through UPI does not automatically mean that this amount is part of a person's business income. That is, this amount cannot be fully determined as a taxable turnover. These digital receipts often include a mix of non-taxable transactions also. For example, the total credits may include exempt sales or nil return sales. The credits can also be reimbursements from employees or friends or other clients. Personal transfers between families can also be a credit in those accounts. Also, hand loans or informal borrowings or repayments can also be. And capital contribution or any withdrawal in a business by the proprietor also form part of these credits in the banks. So on receipt of these notices, a small trader has to differentiate the transactions which are received as part of his business or transactions which are received for purpose other than the business. Another misconception is that opening a savings account means there is a safe haven. Actually, many proprietors and small business owners should be very cautious. Routine business receipts through personal savings account does not shield them from scrutiny. So many taxpayers' personal savings account have also been scrutinized. If such receipts are linked to undisclosed or unreported sales, those savings bank credits will also attract GST demand, penalties, interest, or departmental inquiries also. With the advanced data analytics, the source of funds and receipt patterns in savings account are increasingly being matched against the GST returns and also other financial disclosures. So if I say, we cannot conclude that savings account will not come under scrutiny. Another major misconception, as we have seen in those viral videos, is that many small vendors are shifting back to cash. Actually, shifting to cash is actually not a remedy. Many small vendors assume that moving away from UPI to cash will help them avoid GST scrutiny. This is a very serious misconception. Under the GST law, the mode of transaction is irrelevant. Whether the payment mode can be in any form, that is, it can be a cash, UPI, or check, or bank transfer. Every transaction is considered equally valid and taxable if it represents a taxable supply of goods or services. Suppressing income by avoiding digital trials may seem like a short-term fix, but this could also have an increased risk of notices in the future. Also, with the increasing use of data analytics and other tools, even cash-based activities are also traceable through various modes like purchase side matching or lifestyle matching or bank deposits or third-party reporting. So through these means also, the department can trace out the transactions. So shifting back to cash will never be a remedy. Now we will see the provisions in the GST Act related to registration. Before knowing the registration provisions, first we need to understand what is the aggregate turnover. Only if the limit exceeds the aggregate turnover, then a person is liable to get registered. So we will see what were included while seeing aggregate turnover. The aggregate turnover includes taxable supply, including supply to distinct person having same PAN, zero rated supply, nil rated supply, exempted goods, non-GST supply, taxes other than GST value of outward supply of goods and services on which recipient is required to pay tax under RCM, goods supplied to job worker on principal to principal basis, goods received from job worker on principal to principal basis. In case of an agent, the supplies made by him on behalf of all his principals would be included while calculating the aggregate turnover. Now we will see what are all the exclusions from the aggregate turnover. The value of inward supplies of goods and services on which the recipient is required to pay tax under RCM is excluded. Also, any amount of tax that can be a CGST, SGST, or IGST, or any cess, these amount should be excluded while calculating the aggregate turnover. Now we will see the limit for GST registration. In case of a person is engaged in exclusive sale of goods, then if his aggregate turnover exceeds 40 lakhs, then he need to get registered. For some special category states, the turnover, even if the turnover limit exceeds 20 lakhs, they have to get registered. Such special category states are Puducherry, Meghalaya, Mizoram, Tripura, Manipur, Sikkim, Nagaland, Arunachal Pradesh, and Uttarakhand. In case of person exclusively providing services, or they are providing goods and services, then in such case, for normal category states, the turnover limit will be 20 lakhs. For special category states, the turnover limit is 10 lakhs. We will see other provisions related to registration. Individuals dealing exclusively in exempted products are not required to register under GST unless they are liable to pay tax under RCM. Recently, we have seen a vegetable vendor in Karnataka have been given a GST notice. So this person, he's engaged in exclusive sale of exempted goods, that is fruits and vegetables. So in that case, this person is not required to get registered. So he can provide a clarification to the department that he's dealing in exclusive exempted goods. So for such persons, GST will not be applicable, and they are also not liable to get registered. The provisions of Section 23 of the CGST Act exempt certain individuals from mandatory registration requirements. One such person is a person who supplies only non-taxable goods or services or not required to get GST registration. In case, as we have seen earlier, individuals supplying wholly exempt goods are not required to get registered. Agriculturists engaged in activities directly linked to the cultivation of land, they are not liable to get registered under GST. Those supplying goods or services where the recipient is liable to pay GST under RCM, they are not required to get registered under GST. Moving on, we will now see persons who are compulsorily required to get registered under GST. Section 24 provides the persons who are compulsorily required to get registered. That is a person making any interstate taxable supply, casual taxable person making a taxable supply, persons who are required to pay tax under reverse charge mechanism, an e-commerce operator, a non-resident taxable person making a taxable supply, person who are required to deduct tax under Section 51, person making taxable supplies on behalf of another person, whether as an agent or otherwise, input service distributor, providers of OIDAR services from outside India to a person in India other than a registered person. The government may also notify any other class of persons to get compulsorily registered. Another important point to note here is that we have seen in case a person is required to pay tax under RCM, they are liable to get registered compulsorily. So even though a person is selling only exempted goods, let us say take the example of that vegetable vendor. He's having a small shop. So he's paying rent to an unregistered person. So in such cases, this triggers RCM. So if a person has to pay RCM, then he need to compulsorily get registered. Now we will see the benefits of GST registration for small businesses. GST registration enhances trust among customers, suppliers, and other institutions. This also helps the small businesses to avoid penalties from mandatory registrations. They also help the small organizations to claim input tax credit. So this helps in improving their cash flows. Also, through registration, they can do interstate trade. Also, they can do e-commerce platform sales. This enables them to issue tax invoices and also helps them to procure bigger clients. Also, there is another option available to these small taxpayers, that is the composite scheme, where they can pay tax at a lower rates. Once a person gets registered, he has to compulsorily maintain certain books of accounts, which is provided in Section 35 of the CGST Act. Every registered person shall keep and maintain at his place of business, as mentioned in the certificate of registration, a true and correct of the following, that is the production or manufacture of goods records, inward or outward supply of goods or services, stock details, ITC availed details, output tax payable and paid details, and such other particulars as may be prescribed. So person once get registered, he need to maintain books of accounts at their principal place of business. Next, we will see the option available to small taxpayers where they can go for composition scheme. The composition scheme is one where a taxpayer whose aggregate turnover does not exceed 1.5 crore in the preceding financial year, then that person is eligible to opt for composition scheme. For all states, the aggregate limit is 1.5 crore. For northeastern states and Himachal Pradesh, the threshold limit is 75 lakhs only. Also, a composition dealer is permitted to supply services, but only up to 10% of the aggregate turnover or 5 lakhs, whichever is higher, across all business registered under the same fund. Now we will see the rate of tax for the composition dealers. In case the composition dealer is a manufacturer and trader, then the GST rate shall be 1% without any input tax credit. If it is a restaurant not serving alcohol, then the GST rate is 5% without any input tax credit. In case any other service provider, the rate is 6% without ITC. Even though the tax rates are simplified, there are certain conditions and restrictions under composition scheme, which we will see one by one. The first is the dealer should not be a manufacturer of ice cream or any edible ice, pan masala, tobacco substitutes, or aerated water. The dealer should not be a person making outward interstate taxable supply, including export of goods or service. A composition dealer cannot make export of goods, or they cannot sell outside goods outside their state. Such person cannot be a casual taxable person or a non-resident taxable person. He should not be an e-commerce operator or a person doing e-commerce operation. The dealer should not be a supplier of non-taxable goods or services. As we have seen, no input tax credit is available to those who is opting for composition scheme. Even though they pay tax rates at 1% or 6% for composition dealers, if any RCM payment transaction has occurred, then they have to pay a tax at normal rates for the RCM transactions. If this composition dealer is having different segment of business, say for example, in one they have two businesses, one is textile and one is food business, under the same PAN, then this person has to be in composition scheme for both the businesses. Such businesses should be under the same scheme collectively, or they should opt out of the scheme. This person has to mention as composition taxable person predominantly on every notice or signboard displayed at their place of business. They should also mention the word composition taxable person on every invoice issued. The goods held by him in stock on the appointed date, but must not be purchased from a place outside his state. The goods should not be therefore be classified as interstate purchase or imported goods or brands situated outside the state or agents or principals situated outside the state. Moving on, we will now see the advantages and disadvantages of this composition scheme. The advantages is this has lesser compliances, so this will help the small businesses as there are like lesser frequency of payments or returns. Also, the maintenance of books of accounts are lesser as compared to regular scheme. Also, there is a limited tax liability, high liquidity as tax rates are lower in the scheme. Dealer registered under the composition scheme is not required to maintain detailed records as that of a regular taxpayer, regular GST registered person. Now, the disadvantages is that the first one is the limited territory of business. That is, they cannot do business outside their state. The dealer is prohibited from conducting interstate transaction. Also, no input tax credit is available to these composition dealers. The taxpayer will not be eligible to supply non-taxable goods under GST such as alcohol, and also they cannot sell goods through an e-commerce operator. So these are all the advantages and disadvantages of a composition dealers. Now we will see if if this small dealer or a small vendor has received a GST notice and they are not liable for registration, what are all the remedies available to them? So in this case, we are a small vendor and we have received a GST notice, but we are not liable for registration. Then we can take these following steps. First is these notices are generally issued under Section 63, as we discussed earlier, assessment of unregistered person, or Section 74A, which will be applicable from financial year 24-25 onwards. We need to carefully review the notice to understand the nature of the query, because most of the notices will be as a clarification or clarification on the source and classification of the UPI receipts received. We can also prepare a written explanation stating that our aggregate turnover is below the GST threshold limit only. That is 20 lakhs or 40 lakhs, as the case may be. We can also clarify that the total credits received in the UPI includes amount that do not constitute business income. As we have seen earlier, the total credits includes many modes of payment. So we have to distinguish the business income, and we can provide this clarification. In case we are dealing exclusively in exempted goods or services, we can mention that point as well. So while submitting these responses, we can submit that we can also provide the supporting documents. We can give the bank account statements, UPI credit summaries with classification. That is, we can distinguish the personal transfers or any reimbursements received or any exempt transactions or any loan received. So we can differentiate these transactions and submit it to the department. We can also give the sale bill or invoice copies. Also, we can give the business related proofs, that is the shop registration or any trade license if available. In another scenario, now we will see that we have received these notices and we are liable for registration. So we are a small trader and we have received the GST notice. Now we are liable for registration. So as per Section 25 subsection 1 of the CGST Act, a person who becomes liable to registration must apply within 30 days from the date of being liable. That is, if a person is liable for registration, then he should apply for registration within 30 days. Delay in obtaining registration may result in legal and penalties also. So we need to get registered within 30 days. Next is interest under Section 50 of the CGST Act will be applicable on the unpaid tax amount from the date it became due. Under Section 73, if applicable only in cases of non-fraud cases. So if the tax along with interest is paid within 30 days of the notice, then no penalty will be levied. Also, this person has to get registered within 30 days. In case if he is not obtaining registration, then penalty in such cases will be 10,000 or amount equivalent to the tax evaded, whichever is higher. So this results in non-registration relates in 100% of the tax amount as penalty. So caution and registration should be taken within the prescribed time. Additional points we need to keep in mind. First, we need to apply for registration immediately without any delay, and we need to cooperate with the department. So non-cooperation may escalate the matter. If any invoices were raised during this unregistered period, ensure we declare that now and pay GST on such supplies, even if GST was not collected earlier. Maintain proper documents and records for the unregistered period to support those disclosures. If such person believes that the department's estimation is incorrect, then such person can submit a recent explanation with supporting documents, that such as that the actual bills or bank records, and give it to the department. Moving on, we will now see what are all the notice proceedings in GST. These are all the GST notice proceedings. First step will be the pre-show cause notice proceedings. That can be in various forms such as scrutiny of notice or audit or inspection or search or test purchase or inspection during movement, or pre-scrutiny proceedings can also be taken for unregistered persons. So this will be the first step of the GST proceedings. Next step will be the show cause notice related proceedings. So in case of SCN related proceedings, first intimation of liability in DRC 01A under section 142 subsection 1A will be issued, which will be followed by summary of show cause notice in DRC 01 along with detailed show cause notice. Such show cause notice will be issued under section 73 or 74 or 74A, which we will discuss in the upcoming slide. So thereafter, a person on receipt of show cause notice, he can reply within 30 days. In case demand is confirmed on such person, the demand of tax cum recovery notice will be issued to such person, having a detailed order or special order along with summary of order in DRC 07. Thereafter, the appeal proceedings will start. Such a person can also go for appeal within 30 days from the date of receipt of the order. So these were the GST notice proceedings. Special proceedings can also be initiated, such as assessment of non-filers or summary assessment. As we know, show cause notice can be issued under section 73, 74 or 74A. We will see the distinction between these sections and detailed explanation of these sections. First is why this, the nature of this section. If at all a notice is issued under section 73, that will be a case of tax not paid, short paid, or ITC wrongly availed or utilized for reasons other than fraud or willful misstatement. In case of section 74, the nature of case will be tax not paid, short paid, or ITC wrongly availed or utilized due to fraud, willful misstatement, or suppression of facts. So section 73 deals with cases other than fraud, and 74 deals with cases having due to fraud or willful misstatement or suppression of facts. So from financial year 24-25 onwards, there won't be two separate sections, that is 73 or 74. A new section has been introduced, which is 74A, which will be applicable from financial year 24-25 onwards. For earlier assessments, demand notice will be issued under 73 or 74, depending on the facts of the case. The time limit for issuance of show cause notice under 73 will be 3 months before expiry of 3 years from due date of annual return. In case under section 74, at least 6 months before expiry of 5 years from the due date of annual return. Under section 74A, the time limit will be 3 years from the due date of annual return for relevant financial year. And the time limit for passing the order shall be under 73 will be 3 years from the due date of annual return. Under 74 will be 5 years from due date of annual return. Under 74A is 3 years from the due date of annual return. So the penalty proceedings under section 73. If at all the tax payment is made before show cause notice, then the penalty will be nil. Under 74, it will be 15% of the tax amount. Under 74A, it's nil. If penalty amount, if the tax is paid after show cause notice but before order, then in such cases, under section 73, 10% of the tax amount or rupees 10,000, whichever is higher, will be the penalty. Under section 74, 25% of the tax will be penalty. If at all the tax is paid after show cause notice, under section 74A, 25% of the tax will be as penalty. In case if the tax is paid after passing the order, then the penalty will be under section 73, 10% of the tax or 10,000, whichever is higher. Under section 74, 50% of tax and 50% of tax. So as I discussed earlier, the applicable periods for the section 73 and 74 will be up to financial year 23-24. Thereafter, notices from financial year 24-25 will only be issued under section 74A. So we are at the end of the session. I hope you all got clarity about the GST notices and also how to deal with them in practical scenarios. Another quick update is that we are daily we are giving GST updates through our WhatsApp channel. So this is the QR code of our channel. You can scan and follow us on WhatsApp to get the latest updates. Another one is weekly we are conducting webinars. So I request all the participants to participate in all our weekly webinars also in the future sessions. If you have any queries, please put it in the comment box. We will resolve your queries.
Sir. Yes, sir. Jai, sir. So we have a very interesting question to say that when someone is exclusively an exporter, should there be the requirement of GST registration? Export per se is treated as number one, an interstate supply. And therefore, whenever you are engaged in a transaction of export, irrespective of the turnover, that is, whether it is 20 lakhs, 40 lakhs, goods, services, irrespective of the turnover, you are mandatorily required to get yourself registered, and therefore, definitely it has to be done, sir. Right. So many of these cases don't have proper documentation to apply for GST registration. Even we apply new registration for other persons with all proper documents. Also, a lot of queries are coming. Rama Rao, sir. Yes, sir. That's a very definite practical situation. Government says, get yourself registered under GST. But when I go for asking a GST registration, no, I will not give you a GST registration. These are very practical situations that do arise. But then definitely, even with any address, like even the residential address, it is better to get yourself registered. Now that these issues have started coming with so much of social media frenzy, I think the issue is not just in Karnataka. I hear that now when the session got started, I've been getting a lot of messages to say that even across West Bengal, the matter is still continuing to be the same. That is, people are not resorting to UPI payments, and therefore, so this is definitely not happening only in Karnataka. This is said to happen in all the other states as well, and therefore, now the departmental officers would also get more welcoming in giving the GST notice, GST registration, not the GST notices. The GST registration is what we really practically hope. There has been a circular also issued by the CGST, which very clearly goes on to say that whatever documents are required for the GST registration, it has to be sought for in one attempt. If at all there is going to be a second round, then it cannot be entertained. And if there are any grievances at the time of GST registration, it can be directly escalated. All the escalation contact details have also been very clearly given. And therefore, it is expected that at least before the CGST authorities, that these redress registration grievances would get redressed very quickly. I will ask Ramarao sir and all the August members to refer to instruction number 04/2025 issued on the 2nd of May 2025. Instruction number 04 of 2025 dated 2nd of May 2025, which very clearly provides that with respect to registration, that things have to be really taken care of in a very proper manner. And with respect to this is referred to instruction number 3 of 2025. Instruction number 4 gives the internal instructions for the various who should take charge of it. But even for a shared premises, for a principal place of business, all these things have been given on instruction number 3 of 2025. Instruction number 03 of 2025 dated 17th April 2025. Instruction number 03 by 2025 dated 17th April 2025 very clearly provides how easily we can get a GST registration. So can we get the sir, we send the video recording link actually in the that is available on YouTube. If at all, we can also post it on the WhatsApp channel. You can follow us on the WhatsApp channel. You will get an access to the YouTube video for you to take look back at this video. Surya Narayanan sir, thank you so much for your kind words. So thank you Zentax for the wonderful webinars regularly. The stakeholders are benefited by your webinars. Thank you so much, sir. Thank you so much. Is there any time limit to get URP? What is the situation, Pavitra? Okay, timeline for demand of tax from URP. Sir, demand of tax could be under section 73, for which the timelines have been different. For 74, the timelines are different. So up to the financial year 23-24, we had a period of 3 years from the due date of filing annual return for a case of section 73, and these cases would be very well covered under section 74, which talks about suppression, wherein therefore the time limit would be 5 years from the due date of annual return, but more so. Now that we have section 74 capital A, now that the timeline is even more extended for all situations. Person not registered under GST, but the department issued notice which rate of tax applicable. What is the rate of tax applicable is to be looked into in the GST notifications. Notification number 1/2017 provides the rate of tax with respect to goods. Notification number 11/2017 provides the rate of tax with respect to services, and therefore these respective notifications needs to be referred to for ascertaining the correct rate of GST. Supplier registration cancelled before the date of invoice. Retrospectively, what's the remedy? Yes, Pichandi Balaji sir, this is also a very practical situation that the registration is getting cancelled or suspended for whatsoever be the reason, in which situation immediately on cancellation for or before the time of cancellation, there would be a due show cause notice which is being issued. In response to the show cause notice, due reasons needs to be justified as to why the GST registration should not be suspended or should not be cancelled. If at all you miss out on that opportunity as well, immediately on receipt of the cancellation order, file an appeal or seek for revocation of cancellation from the respective proper officer, from the jurisdictional proper officer, and therefore there are remedies which are available, and therefore you need to file an appeal or apply for revocation of cancellation of registration. Can an URP after registration request composition scheme for the earlier period? No, sir. Not for the earlier period. Composition can only be for the prospective period. For an only exempted goods dealer, RCM is to be paid for rent. Is he has to be registered? Arthanariswaran, sir. Yes, sir. So there are some exemptions which have been given for some category of taxpayers where reverse charge applicability will not be there. With respect to rent, we will also check very particularly. We will also, because the rate, the reverse charge notification, as is contained in notification number 13/2017, specifically provides that it is to be paid by a registered person in multivarious situations. So let me also check very specifically on your question, so that we will be able to have a very immediate answer to this question, which is a very interesting and also very important question to answer. That is, when an unregistered person pays rent to another unregistered person, then should he get himself registered only for the purposes of paying the reverse charge with respect to this service, right? So, sir, situation does not arise, I refer to serial number 5 capital A capital B, that is serial number 5AB of notification number 13/2017. This serial number 5AB is the entry which talks about where the service by way of renting of any immovable property other than a residential dwelling is subjected to reverse charge whenever it is applied by an unregistered person. In this situation, what should be the category of the recipient is extremely very clear, wherein it is defined that it has to be a registered person. Any registered person only is required to pay the tax with respect to renting of immovable property, and therefore the specific question you have raised is very clearly answered. We hope if there is anything more, we will definitely be glad to answer the same. By D, insightful session. Thank you so much. Prakash Kodiali Ranappa. Can URP request to provide to pay concessional rate of tax at 5% without ITC? So, based on the nature of service, if it is in the case of restaurant services, then he can opt for the rate of 5%. But for other services, there cannot be this concessional rate. Generally, concessional rate are provided based on conditions, and the conditions are or can be fulfilled only by a registered person. On UPI transactions, which tax rate applicable? Sir, for UPI transactions, generally there is no tax rate. We are not talking about a banking transaction tax. We are talking about a goods and services tax, and therefore the rate of tax applicable for the respective goods or the respective services as has been provided for in notification number 1/2017 with respect to goods or 11/2017 with respect to services would only be applicable. Thank you, sir. Ramarao, sir. Thank you so much. Shivappa, sir. The last question for the day. The department issued notice on UPI basis is URD and pay tax on composition. No, sir. In our opinion, opting for composition is only for a registered person. Unregistered person opting for a composition scheme at this moment is not really possible. We will have to dispute the situation before the various judicial forums, and then we have to check about the interpretation of law through the judicial forums, number one, and thereupon we will also wait to see how the law gets amended for its implementation. Thank you so much, everyone, for your active participation. Thank you, Pavitra, for the insightful discussion. We look forward to your participation at the 84th session of Zen Tax Talks for another very interesting and important topic. Thank you, everyone.